The bipartisan CHIPS Act passed by Congress under the Biden administration focused on incentives for domestic chip production. President-elect Trump has called that CHIPS Act, quote, so bad during his interview with Joe Rogan. He's been very critical of the implementation of that. And Trump has approached competition on chips by threatening tariffs on China. Now, amid those threats, Beijing recently launched an antitrust investigation into Nvidia. Joining us now for the road ahead here for chip makers under the incoming Trump administration, we want to bring in Patrick Moorhead. He's the founder and chief analyst at Moor Insights Strategy. We also want to bring in Chris Miller. He's author of Chip War. It's great to have you both. Patrick, let me go to you. When we talk about how critical President-elect Trump has been of the CHIPS Act, he wants to obviously make changes. Lots of questions about what exactly the pathway forward is going to look like here for the industry under Trump. Is it a positive picture or is it a negative one?
I think it's going to be net positive. I mean, Trump doesn't want to be the president that tanked the tech stock market, and he certainly could do that if he puts any weight on the chip stocks that have been a tremendous part of the growth over the last 4 years. And I think for people have to keep in mind that with him, it's all about the art of the deal, going back to the book that he wrote back in the 80s. And I think this is all about a negotiation. I think it's all about getting companies like TSMC and Samsung to create more jobs here in the United States. With all of the advanced semiconductor manufacturing leaving the United States or most of it, Trump's trying to get the best deal to bring it back in. I do not believe he will tank the stock market or major industries to make that happen.
Well, Chris, it's really interesting because we know that the origins of the CHIPS Act came under Trump 1.0, and then he says the way it was enacted was so bad, as we mentioned coming into the segment. So based on your reporting, what do we know about what Trump's 2.0 CHIPS policy could look like his second time in office?
Well, I think that's being defined right now by the president-elect and his incoming administration. They've talked about tariffs as a potential tool. And of course, Trump imposed a whole lot of tariffs during his first term. And I think we should expect that they carry through with at least some of these threats. I think Patrick's right. There will be negotiations, there will be deals cut along the way, but you only get to deals if you build up leverage first. And I think that's exactly why the new Trump team is threatening tariffs, not just on close allies, but also importantly on China. And it's China that bore the brunt of Trump's tariffs in his first term. And I think it's China that's very much in target right now as the Trump team maps out their tariff strategy for the upcoming term.
Patrick, it's very much a wait-and-see mode, although many of these chip companies are acting now, or at least talking about maybe that strategy, even looking to hear a little bit more this upcoming earnings season. But I'm curious, in terms of the potential bottlenecks that could be created from a supply chain perspective, is that something that investors should be worried about? Or I guess to what extent or when should they then be more worried about the impact of that?
So first off, I just want to say that I don't think China is going to be the major issue here. I think it's more TSMC, but I'll focus in here on China. I think investors should be looking into every one of their investment plays and seeing if they have a supply chain resilience plan. It's a what if. I will tell you the assemblers of PCs and servers and networking equipment are actively engaged in finding ways to move manufacturing out of China. I think China has a lot of leverage here. There was some discussion earlier about that leverage. I mean, China could maybe slow roll a 30-cent PMIC, power management integrated circuit, to hold up shipments of $100,000 cars here in the United States. They can also play tit for tat like we've seen, like they did earlier with IBM and then with Cisco, and then now we're seeing with Micron. So China holds a lot of the negotiating power here that's related to semiconductors. So we can't forget that. Again, this is all about a negotiation. Trump doesn't want to tank certain markets. And the other thing he doesn't want to do is he got elected based on bringing inflation down. And we all know that tariffs will increase prices of final goods particularly putting a 60% tariff on goods that come from China. You can imagine everything getting a 60% tariff would absolutely raise inflation here in the United States. And the Trump administration is not going to do that.
You mentioned the tit for tat, Patrick, so I want to stay with you because we know that Beijing has launched this antitrust investigation into Nvidia for anti-competitive practices. Let's just get to what investors want to know. Is the precious market darling Nvidia going to be okay regardless of any potential policies to come under Trump 2.0?
Yeah, so all or most of Nvidia's growth has been in the hyperscaler data center, and pretty much every one of those cards and those platforms have been banned from going to China. There was a wave of tuned down Nvidia parts that went in there. So Nvidia has already been reduced in China. I mean, sure, it could go from 10% to zero. I don't see that happening. So net, I don't see a big impact. There is some packaging and assembly that happens in China, that advanced CoWoS and CoWoS 2 packaging. And that's something I just need to do a little bit more research on what they do with it, because what that could do is raise the price of those technologies where Nvidia cards are made, assembled, or there's packaging done there, which could also be applied to tariffs.
Chris, what about the industry-wide implications or waves from this? When we take a look at what's happening here with Nvidia, how worried should some of the other larger chip makers like an AMD be, just in terms of what this could potentially signal could be coming down the road for them?
I think Patrick's right. Nvidia is much less exposed than the typical chip maker, with a smaller share of its revenue coming from China. Others have a much larger China revenue share. Some companies, it's as high as 50%. And we've seen China take steps not only against Nvidia, but other US companies too. A cybersecurity investigation threatened against Intel earlier this year, a different investigation against Micron last year. And I think China is signaling it's willing to restrict access to its market as a retaliatory tool against US firms if the Trump administration tries to ramp up pressure.